So my name is Chris Wedding. I'm an executive in residence here at Duke. I'm also the CEO of a CEO peer group community called Entrepreneurs for Impact. We support venture capital and private equity CEOs, back CEOs across the country. And luckily, Megan is one of those CEOs with us. Megan also has other fun awards to her name. So this is time to blush, Megan. This little-known magazine called Time Magazine last November picked 100 people around the world as leaders in climate, and our very own Dr. Megan O'Connor was one of those folks. Round of applause, I think, for Megan here. Yeah. Okay, so before we get into the 4 questions in our lightning round, two notes that start with H. One is hope. Both in our prep for this session, plus talking to some of you all earlier this morning, it's like, well, how much hope and optimism will there be on stage today? This is one example for sure. The other is history. So you won't hear Megan's history around starting this company, but I hope you'll check out a podcast with her, MCJ, What It Takes, or maybe our podcast at Entrepreneurs for Impact. Thank you very much. Okay, so the questions, we'll start first with what are critical minerals? A very smart person yesterday said they are the new oil, and that person was you. Anyway, what are critical minerals?
Well, thank you for that introduction, Chris. And it's nice to be here. Yeah, critical minerals, they are the building blocks of the clean energy transition, right? Think about cobalt, nickel, copper. I think lithium gets a lot of press. They're in the military applications and aviation. I mean, they're everywhere. And one of the main issues that we have in having them all in all of these different devices and applications is the fact that we don't control the supply chain for these minerals, right? I mean, the building blocks of this energy economy, and we don't have any control over the supply chain. 85% of the world's critical minerals are refined over in China, and that's something that the administration is talking a lot about. And I think part of the hope here, as Chris mentioned, is the policy around the space and the movement that we're seeing to try and build the supply chain back here in the United States.
We're moving so lightning fast, we may cover more than 4 questions. So you mentioned government policy. We've seen some of the executive orders come out. How is it shaping the direction of Nth Cycle?
So I think over the past couple of months, right, we've seen a lot of executive orders come out. 3 or 4 of them have been about critical mineral supply chains. And I think the administration, and this is not new, right? The Biden administration was also focused on critical minerals, and we've been, sort of in a trade war around critical minerals for 30 years, right? So this is not a new issue, but we're really excited to see the movement in the space, and with these executive orders, really the direction that the administration wants to take of onshoring, not just mining, not just recycling, right? Because those are really the 2 places that you can pull more of these critical minerals from, and we don't have a really robust mining industry here in the United States. But even if we were to develop that, and even if we were to get recycling to where it needs to be, we need a way to refine those materials into something usable for manufacturing, right? We heard in the last panel we need to bring more of that EV automotive supply chain back here. We need the critical minerals to help do that. And so I think a lot of the executive orders and even the tariffs are helping to push us in that direction to really onshore these materials, and not just one part of the supply chain, which I think we've seen in past administrations, but really holistically looking at where can technology make a difference and where can policy play a role. And so we're constantly going up to DC because, right, these are still executive orders. And so how is that going to be implemented? And we're trying to work with all these different folks in Congress to help them understand what could be really impactful from an industry perspective and really catalyze this industry. Because there's been a lot of us working for more than the past decade and trying to onshore these things, but I think we finally have the momentum to start to do that realistically.
Great. Let's dig into what exactly is Nth Cycle.
So as I mentioned, there's 2 places that you can get more of these critical materials, like the cobalt and the nickel, copper, lithium. You can mine more materials out of the ground, or you can get them from end-of-life materials. So think EV batteries coming off the end of the line. Oil and gas catalysts are considered a type of recycling scrap with the nickel. But there's, again, if you have those materials, you have to refine them into something usable again. So Nth Cycle is a chemical refining company that takes both of those inputs and turns them into something usable again for manufacturing. And the way that the world works now, and why we don't have this industry here in the US, again, I mentioned over 85% of the processing capacity for these materials are over in China, because typically how this industry has worked is you have a $3 to $4 billion refinery, right? You think chemical refinery that you stand up for these materials, next to a very large, long life mine, right? So a mine that might produce these minerals for decades and decades and decades. So it justifies the investment in this, multi-billion-dollar chemical refinery. So those types of mines exist overseas. We don't, unfortunately, have those types of mines here in the US or even in the Western world in general. Very similarly for recycling, right, we don't have magically one pile of batteries or one pile of scrap, so it's really hard to justify this like big centralized model that this metal refining world has been built around for many, many years. And so when Nth Cycle looked at that, we said, what are the major pain points of getting refining onshore? It's being able to match the refining technology to the volumes of material that we have here. So the volumes that the mines will produce over time, the volumes and the regionality or the distributed nature of recycled materials. How can we build, a smaller and still very large like refining system, but not have to go to, the massive, massive scale that you see overseas and be able to distribute these sort of all over the US. So it's not as capital intensive, easier to deploy, less permitting, and in that process allows us to reduce the overall carbon footprint. And so that's really what Nth Cycle has designed and has implemented in the past year, is this modular refining system that basically takes a very fossil-heavy industry. We use electricity to produce these chemicals, but really the pain point that we're solving is we can match the volumes and materials we have here, so it justifies the investment into this space, and we can deploy them very quickly so that we can start to onshore these critical minerals next year instead of 10 years from now, which is the typical time frame it takes to stand up one of these refineries.
Yeah, I just want to point out that, so Megan, PhD in engineering, so clearly some innovation on the tech side of the solution, but part of the reason I think you all are successful is how you're going to market. But this kind of modular capital expense light approach is very different than others out there,
Very different. I think one of the problems that we have, and I think I heard somebody on the last panel say this, but it's really hard to fund a startup or a new innovation when you need all this upfront CapEx, right? And there's so much technical risk associated with that. And so we said, in addition to solving all the problems, within the traditional way that we refine, how are we going to finance the business to be able to scale up in the time frame that we need, the country needs, the world needs, and what venture capitalists need at the end of the day when they put money in, right? They want that return in a certain amount of time. And so when we looked at how do we do this, we said, all right, if we can do this modular approach to solve these industry problems, it also allows us to have, projects instead of on the billions of dollar range in terms of CapEx, our projects are $40 to $60 million, right? So still, like a lot of money for folks who are not in hardware, but it's a much more manageable check size, and we can do more of a portfolio approach and deploy these very quickly to get to scale over the next several years. And that's really how we thought about, sort of the landscape in the market as well of, we want to work in the mining space and we can have a really big impact there, but it's, again, really hard for innovation to get traction with big mining companies who are not used to seeing innovation, right? They don't want to change that quickly, and they're looking at like decarbonizing their flow sheets and things, but it's going to take them time, and you just can't make enough traction as a startup like with those very long sales cycles. And so the reason we started in the recycling space was, and we partner with these folks on their sites, is that scrap material is there, right? It's there, it's waiting for us, and right now it's all being exported overseas, right? So all of our one operating nickel mine, all of that material, it's in Michigan for folks who don't know, all that material is being shipped to China to be processed. So we're producing this nickel here, we're losing it immediately. And the same thing is happening with our recycled materials, right? We have a great logistics backbone. All these companies are collecting this material, they're maybe mechanically shredding it, and they're sending it overseas. And so we want to try and move as fast as we can to try and keep as much of that material here, so that we don't continue to lose it to overseas companies.
So someone's working at a large scale when they're like, it's only $40 or $60 million per project. Speaking of capital, so you've raised, I think $65 million, both some government, some corporate investors, some purely financial investors. Maybe talk to us about their motivations to invest in your growth.
Yeah, so really early on in Nth Cycle's history, so we were founded back in 2017, so during Trump's first administration, there was a lot of early stage government support, and I think there still is. We were in a Department of Energy program called Innovation Crossroads. The sister programs are Activate in Boston, if people are aware of that one, or Cyclotron Road out in California. So really great early stage, like I came right out of my PhD with this technology and needed somewhere to land to actually scale it to a meaningful scale before we could approach, the venture capital market. And so that was a really great way for us to get the technology to a stage and to get the sort of business mentoring that we need to explore all the things you have to explore as an early entrepreneur, product market fit, how we're going to deploy this technology, how we're going to capitalize the business. And then we were supported by NSF and some other earlier stage funding as we scaled. And then more recently, we did win the 48C tax credit for our first commercial refinery that went live in September of last year. So we're the first nickel refinery for scrap materials in the US, which is really exciting. And then throughout that, we also were able to raise private capital in the very traditional sense with a lot of the climate investors in the space.
So with this first project in Ohio, now it's time to repeat that with other projects. You're entering this space of first of a kind or nth of a kind. That was a pun.
I like that. I'm going to use that.
Talk to us about how you hope to maybe not finance it all through the corporate, but also through true kind of project finance. What does the structure look like, or the nature of the investors, perhaps?
Yeah, I think really what we're looking for here is a diversified capital stack of folks who are looking at first of a kind, second of a kind, third of a kind, right? I mean, there's so many different, the missing middle. So if you know anyone in the missing middle, please send them our way. I think there's a lot of companies who are getting to scale in the same sense we are. That might not be in critical minerals, but in cement or for other like heavy industries that we're trying to decarbonize. And we all need very large amounts of capital, and it just doesn't make sense to do it all with like top co-equity in that sense. And so we're looking for folks who are willing to take probably a little bit of technology risk. I would say we have our first commercial facility up and running, but really looking for people to come in and understand what our model is, look at the technology, understand what it will look like for the next 5 projects, and do more of a portfolio approach. And so don't really know what that capital stack looks like. I think we're looking for some feedback, and especially in this market. But I think it's like we're trying to get to a place where we can rapidly deploy these and recycle that capital over and over again, so we can continue to deploy at least 2 or 3 projects a year.
And for the students in the room, if you haven't studied first-of-a-kind project finance, as companies go from very well-funded VC, kind of proven tech, to true project finance, much lower cost of capital, way more debt in the kind of financing, that is an unsolved problem, and it's a gigantic problem. And everything we're talking about today can't scale without that kind of financial innovation. So there are lots of careers to be made in understanding first-of-a-kind project finance. If you figure it out quickly, come talk to Megan. The last question is, how do folks get involved? So at least 3 buckets here, right? Clear the students, investors, maybe corporates with an angle around mining.
Yeah, I think for students involved, right, and it was great attending some of the events yesterday with the students here. I think find an area in clean energy, and critical minerals seems niche, but not to me. But find an area that you're really passionate about and go find a job. I mean, we need so many passionate, hardworking people, because building innovative companies is hard work, right? And we need people who are really dedicated to the mission. And so I'm always looking, and I know companies in space are always looking for students and other folks to join those teams and to really help us get to scale, because it will not be a fast journey, and we need people who are there for the long haul with us. I think for investors, right, I mean, we talked about the missing middle. We need folks to really take a look at some of these really hard to decarbonize industries with technologies like ours that have a proven track record and help us understand like how we can finance these to get sort of over this valley of death, as I like to think about it. And then for partners and different corporates in the space, I think partnerships are the way that we're going to solve all these climate issues, right? It's not going to be one startup, it's not going to be one company. I think it's going to be a combination of companies working together and really trying to figure out who should do what. And I heard this on the last panel, like, we don't have to do everything ourselves, and so we should find the right partners in different countries and really work together. I think that critical minerals is particularly interesting. I think the Western world, we all face the same issues, is that none of us have a secure supply of these materials, and so I think it's gonna be a combination of us working together to really solve this and where things are deployed and how it's done.
You mentioned the phrase, find a job. I'm thinking about how do you create a job, which is what you did from PhD to creating this company. In 30 seconds, what would you share on that difficult choice and long process?
In terms of how I started?
Yeah, how did you have the gumption, grit, et cetera, to
yeah, I went to grad school. My background's in chemistry, so very technical. I came to Duke specifically for the civil and environmental engineering program because I wanted to work with an interdisciplinary team of people to solve really hard problems, and that's what I got here at Duke. And I think it was some luck that I developed a technology that could actually help solve these things, but even the early stage modeling that we did, right, like early techno-economic analysis showed the impact this could have, and when I started the company, I was 28 years old, and I said, like, I'm gonna go out and try to do this and find really smart people who have built a business before, because again, I don't have to do everything myself. Like, I have the technology, but I'm gonna go find a great CFO, right? Like a great project manager, people who have scaled technology before. And if I can develop that team with this great technology, I think we can have a really, really amazing impact. And so to the students out there that if you don't have a technology, like that's not the only way that you can start a company, right? Go find people that have tech because they need people like you, right? It really takes a full team and a village, a whole community to really create a successful startup. And so that's like my advice, and I'd say take the leap of faith because we need more innovation, right? Innovation is going to solve these massive climate issues, right? It's going to be technology in a lot of these cases, and we need people to take that leap of faith and go for it.
We promised you hope. You heard it right there. Hope from Megan O'Connor. Round of applause, please.